Okay, I think we're all set here. Just waiting for the thumbs up from Carlos. There we go. All right, it looks like we are good to go. Audio is good, so good morning, everybody. Welcome back to another Engineering the Markets. My name is Jared. It is August 15th, 2022. Happy Monday, and welcome to another week of trade for the overall marketplace. And hopefully we'll have some opportunity like we saw last week, where the market certainly did move in character with both a prevailing uptrend along with the continual reactions to things like consumer sentiment, PPI, and ultimately we saw sort of the resolution of the CPI trade, which did come in lower than the market's expectation. We're obviously seeing some reduction across certain economic factors, things like energy, oil and gas, along with maybe a stalling of food prices, which are still elevated. But overall, the market was reacting quite positively to the readings and the assessment of potential policy moving forward from the Fed. So lots to digest last week. It certainly was an active trading week for a lot of people. And what's great about last week, I think, just to kind of do a little bit of a recap, is there was a little bit for everybody. I found that there was momentum trading really taking good place in a lot of IPOs, a lot of lower float names starting to trade quite well for people. You have sort of a resurgence of meme stock trading, the likes of Bed Bath & Beyond is certainly carrying a lot of interest and bringing in more retail participation back into that space. And if you're not trading any of those areas, if you're looking maybe sector performance, there was quite a few bull movements across our major sectors, and each of those having their own stocks in play that are quite good on the intraday. You take a look at last week, and what's actually kind of surprising is, as bullish as the S&P was, our strongest performing sector last week was energy. This is somewhat due to the location of crude pricing. We're seeing sort of reassessment and retesting of the previous lows that were established back in, I believe, April. And overall, crude's trend has been back to the downside, but ultimately we haven't lost that lower range. So some of that testing did bring sort of a resurgence back into some of the energy names. And a lot of their performance from more of a technical level was a position of strength. It was more of an opportunistic location for the market. You kind of compare that with financials as well, which not only had a strong week, but I would argue is starting to become more momentum based near the top end of its trade. And we'll look at that chart in just a moment. We called out the fact that financials have likely bottomed a couple of weeks prior. This was due to its location on the weekly and also the key 200 period moving average, which has acted as its main support area for the past couple of years. So financials were looking to hold this level, and now we're seeing maybe the more momentum side of that trade starting to take shape. And then as you just kind of scroll down the list, we're seeing very strong performance overall across multiple sectors. You compare that to last week's performance in the S&P, where the market did gain about 2.5%, at least from its previous week's levels. We did have a slight draw in, and of course we broke out on Wednesday to Friday. So most sectors are either performing with the S&P or slightly above. You'll notice that at 2.5, you compare that to most of our trailing sectors here below financials and energy, and most of them are actually going to see better performance. So keeping the overall S&P very healthy. You'll also notice IWM had a lot of strength last week. This is mostly due to some of that energy play, but also a lot of key underlyings in IWM, providing a lot of boost for that particular index. Some of those stocks were actually on the magnitude of 20 to 30% recovery last week. Things like biotech are certainly helping in that space as well. So a little bit of a recap from last week. I like weeks like that simply because the bias of the market is fairly obvious. You maybe get a little bit of reversal play on Thursday. This would have been one of those days to counter the overall trend, but ultimately the longer bias is still intact, and we didn't really get a confirmation signal below this level. It was simply a day of maybe stall and price reassessment, along with some movement of different sectors. So we'll go ahead and start off the week with our SPX expected move. Notable that we're still seeing volatility reduction across the S&Ps. So if you compare last week's expected move, which came in at about 87 points, and the fact that we did have a breach. On Friday, we had a lot of upside gamma risk in the market, and that facilitated itself in a expected move breakout. So that upper expansion was a move outside of expected move. It actually made a significant deviation for the market, about 1.5 times the expected move on Friday. We called this out as a potential possibility simply because the prior week we didn't have an upper or a lower bound test. And while we were maybe looking for one of these levels to be tested, the breach here is actually more of a likelihood on the Friday session because Thursday could not pull back in significantly. The Friday session actually had that previous day high breakout, and that led to a lot of covering, a lot of hedging behavior, and just your normal market dynamics on the Friday into an expiration. So interesting breach, interesting new expected move for the week. It's a little surprising to see it this low. Once again, we're not necessarily in a large catalytic week for the market, so volatility can be sort of compressed, but we just had an expected move breakout. So that kind of is a weird dichotomy of the market's not pricing volatility very high, and yet we are still seeing expansion, which is a little bit of an odd characteristic. I would argue that that's usually not the case for most of these ranges. So keep that in mind when it comes to market volatility, actual versus what's implied. If you were selling premium last week, I think you would have had to maybe manage your risk as we started to test the upper bounds. And then, of course, on Friday, you might have gotten even further testing or maybe even gotten out of a trade. Simply because if you were selling premium last week, there was quite a few expansions in the expected move, both from different sectors and also some key stocks. A lot of them have had clear breakouts, continuing in their trend. So for now, our upper bound 43.56, our lower bound 42.04. I would argue that last week, because we had a test, we'll kind of be looking for those same testing events to occur. But I'd also be a little cautious of a longer or a further breach this week, mostly because of the characteristic changes in the market. For one, I would argue that the SPY is still a bit extended at this point. If you're looking at some simple moving averages, we're very far away from our trending moving average, which is roughly our 20, and then sort of our core support moving average, which is our 50. Both of these were recovering. So it's usually the case where if you get a turn in the market, bullish or bearish, moving averages can take a while to catch up to the price. But as you can see, we've continued so aggressively that even the 20 is having some trouble catching up. What's starting to happen here is we're getting a fairly aggressive trend line off of the lows. Every single pullback has either come into this trend line through price or through time, and we're seeing continual expansion. So we're obviously still in a daily uptrend. Everything structurally is still benefiting the bulls, but the risk here is getting higher and higher. As we continue to climb, no significant pullbacks as of yet, and ultimately we'll kind of see where the next target might be for the market. One place that I'm starting to look now, simply because we're close enough to it, is our main resistance point. This is a resistance that was established back in March and April, and ultimately the market's climbing into these levels. What it means is that we're not quite there yet. So we could have a little bit more upside baked into this trend, and ultimately getting to the 200 period seems like a very obvious point at this time. It's close enough to those levels, and ultimately we haven't really been back here since our previous rejection back in May, where the volume really kicked into the downside. A lot of bearish sentiment back then. We haven't tested this in quite a while. We also haven't really lost the current daily uptrend, and we just had a weekly breakout of a pivot. So all of those factors kind of keep me, at least in the short term, in scope of what's currently happening, which is the market is still advancing. There's really no warning signals yet for the trend, or specifically certain levels that could have reacted bearish and they didn't. Horizontal levels, anything that would have acted as a stronger rejection level, most of them have failed to be bearish. And as we continue to climb here, one thing I'll be looking at is what sort of trade should we be setting up into these levels. For now, I would argue that we're so close to this upper bound that you could start to consider setting up some targeted trades for these levels. Things like butterflies, any sort of back ratio that's using a call premium that's higher than these levels. These are going to be some targeted option trades that ultimately will have a defined risk relative to a final target. But you're also expecting this to be a stall point for the market. You don't expect it to break through this area immediately. More likely that will get, once again, a pullback or even something more characteristic of a trend change, just to counter the daily uptrend that we're currently in. Another thing you might consider is, let's say you're not bullish at this point, or you're not willing to get bullish into these levels. One thing you can do is start to evaluate the lower bound structures if the market pulls in deeper from its current trend. So for example, not being bullish up here, not accepting that risk, is an acceptable way to evaluate the market. But if we pulled into these levels, for example, let's say we back test the breakout point on the weekly, would you be bullish then? The market may offer that opportunity in the next maybe week or two. A pullback into these levels would indicate that as a bull, these prices may be relatively cheap compared to what was previously assessed as maybe rich or slightly elevated. So don't necessarily sleep on the levels that we've gone through. If the market offers those opportunities again, we can set up short-term trades, even if they're not necessarily as powerful as our current breakout, because usually this is where all of the momentum gets sort of exhausted as the trend finalizes its structure. So a couple things to maybe consider there, but ultimately, what is the market doing? It's advancing. We're putting a lot of pressure on weekly bears. One, because we broke their pivot. If they wanted to defend this area, they should have done so a week ago, and they didn't. So we broke their pivot. We've also removed ourselves from a weekly downtrend. At this point, because we've made a higher high on the weekly, we're not necessarily in a weekly uptrend, but we are no longer in a weekly downtrend. You can make those statements as certain things close. And based on this chart, because this area was cleared and closed above, we are technically no longer in a weekly downtrend. So those statements are starting to become apparent as the market is recovering. And this is one of those evolving charts that ultimately we'll be kind of keeping an eye on for anything additional than what we're currently seeing. So couple of factors for today. Let's take a look at crude. I would say that this is one that's not only been on watch for a long time, but has driven a lot of trade, both in bullish and bearish sentiment across the market. And of course, if you're trading energy stocks, this is definitely one to keep an eye on. You'll notice that we're pretty much at the bottom end of our trading range. It is arguably possible that crude could break down today. We're seeing some trade activity occurring below the 200, and this is after the 200 had bounced. So you kind of look at this just from a trending perspective. You argue that we've already made a move. We've bounced into a 20 moving average, which is our key resistance for lots of these sell swings. Most of this trade cannot really clear the 20. And what the crude is very likely to try and do is break down. There might be some catalyst on crude. I'm seeing the chat room saying that there is some news. I read very briefly that there is some weekend activity that might drive this trade. Conceptually, though, we've been looking at this for a long time. It's very notable that crude has a very clear trading range. There's a mid-level at about 100. That's obviously going to be your VPOC zone, where a lot of the overall mid-range value sits. And losing this level would be significant because it indicates that we're no longer trading in that elevated price range that was established in March and April. So keep an eye on crude today. Maybe look for energy trade, but also keep in mind that this might actually be a more impactful downside move. Everything else we've seen has technically been within the trading range. So there's been play both as a long, and obviously these kind of moves are the more exciting ones, but there's been play as a short. And our recent trend right now has been to the downside. It's structured as a downtrend. Doesn't mean that the range is going to break down, but it's the day where you certainly want to assess that potential. I'd keep a very close eye on that. It's one of those opportunities that might show itself very well today. And if energy stocks are on the downside, they might be all day runners simply because crude is breaking down. That would be the kind of spark to lead to that kind of trade. I'd argue the same thing with natural gas, albeit it is a stronger asset class. It is structured bullish at this point in time. We're just drawing in on a pullback. So once again, there's crude weakness. Natural gas is still strong. Ultimately, it's trying to break through approximately 9. And then you compare that to gasoline as well. Little bit of similarity with the crude chart, but ultimately looking at some downside play opening this morning. So weakness in energy, I'd keep that on watch. I'd also keep volatility on watch. As I mentioned, market volatility is pretty low at this point in time. And this is a fairly busy chart. So let me take off some of this information. Just because we haven't seen a volatility spark doesn't mean it's not waiting in the wings for us. And the VIX trading at about 20 tends to be an inflection point. We've come all the way back in from resistance. We really didn't see any strong behavioral characteristics at the 30 inflection. We rejected it bullish, and then we pulled back in. There's some trend line structure here, but ultimately the VIX is just a 30-day S&P volatility index. So the key here is that volatility hasn't been this low in quite a while. If you're looking for a bigger play in the market, one thing that's going to bring the market back down is a vol reaction. Last week, getting outside of expected move, the vol should have expanded and it didn't. It was a Friday sort of close, so that's fairly normal. But for now, on Monday, watch your volatility readings and kind of keep an eye this week if we're getting any sort of trade occurring in vol futures, if we're seeing a pickup maybe in people buying premium. This is actually something that's been kind of slowly shaping up in the wings here. There's a little bit of interest back into some VIX premium. It's nothing really of concern, but it's ultimately different than what we've been seeing. Most of this structure has been here. And if we kind of clear this rough supply demand trend line, that may indicate a little bit more downside play just in the short term, to kind of bring the market back to fair levels, as opposed to these more overextended levels. So keep an eye out for this. You could even consider setting up trade based solely on these signals, because ultimately if the market does pull in, you'd want to see maybe a vol reaction kind of accompany that. So, trying to think. Last but not least, skew. This is something we discussed briefly last week as well. Wanted to bring this back in to our discussions and just kind of show behavioral characteristics here. And one of the reasons why I like being a technical trader is because conceptually, I don't really need to know too much of what's going on outside of the chart. I'll need to know that more for surprise events or quick changes in sentiment. But a lot of the time, what I'm looking at is already on the chart. And skew is no different. The reason I brought up these highs and lows is because, like most supply demand models, you're going to see reactions similar to technical trade inside of something like skew, regardless of the fact that it's not really a buyable instrument. And what I like about this is it's a very clear range breakout. You have your lows and your highs established. You trade around them for a while. You even have some head fakes and some lower range testing, very normal in lower range trading. And ultimately, the move that you pay attention to is when you go from low to high. If you ever do that inside of a trading range, especially, you're looking for that sign of strength, ultimately to leave the range. And you can do this in a few ways. You can buy things like VPOC, if it is something that is tradable. You can also look for the breakout and the back test. And we've been seeing this across the market. No matter where you look, there's been a lot of lower range trades that have broken bullish. Usually in a lot of growth names, I would call it maybe the trash kind of names, the ones that have poor overall financial readings, but ultimately markets seeing some value here because they've been corrected so deeply. And a lot of these ranges have broken bullish. Some of them that are notable, let me get this off the chart here, have been PayPal, usually with their earnings kind of clearing some of their trading ranges. We've spoken about Coin breaking out. We've spoken about one that's actually kind of an interesting one was Carvana last week. This is one of those really strong short interest kind of names. So it had a lot of power to the breakout. And you're seeing it across the specific name You're seeing it in maybe some sympathy plays. For example, I was looking at VRM for Vroom, lower price name, but it's one of those names that's still making 200 to 300% recoveries off the lows. Very opportunistic trade events. Well, that one maybe 150%. So a lot of names are just coming off of these lower end ranges. Doesn't mean that anything really has changed about the company. You know, obviously, as an investor, you want to be careful just trusting the technicals. But if you're a trader, you're looking for these. You're looking for these moments in time, these breakouts, these back tests, continuation of trend, really just looking for the market to give you opportunity and risk, allowing you to kind of weave in and out as we start to settle into a potential new market condition. So for that type of trade, I think for now, keep in mind that the market is still very much advancing. We're looking for some topping behavior, but ultimately be careful assuming any specific day is the top. Allow the market to really establish and set that level with a confirmed or some sort of very characteristic reversal structure. Be careful shorting weakness at this point, because remember, a lot of things that have overcorrected to the downside, it leaves a lot of room for their recovery. So the upside in the market can be just as powerful, and we're really seeing that across small caps right now, with the IWM already looking at about a 50% retracement from low to high. So, you know, keep that in mind. This market pulled in significantly, but just from this recent wave, we're already at a 50% retracement approximately. You know, we're a couple bucks away. So keep these concepts in mind. You don't necessarily have to be on the same side of the market just because of the previous trends. You can be looking for those structure changes, and the upside is just as attractive. Main thing though is just not to be too caught up in these bullish moves and these short-term signals to maybe go short. Puts a lot of people under pressure, and it also traps a lot of bears until the trend fully exhausts. So you'll notice here, you know, if you're chasing the IWM short, there's been 2 days that have put up short signals, but they're not really well confirmed. And ultimately, you know, those have been just stalls in the overall trend. So keep all that in mind. Watch out for this S&P resistance. Watch out for the 200. But for now, let's see if we can actually get there. Market may just have a little bit left in that fuel tank to get us to those levels. And then we'll see if there's any significant downside, at which point we'll have plenty of trade opportunity in the market. So with all that said, my name is Jared. This is Engineering the Market. Stay tuned for pre-market prep. We'll go into a little bit of some correlated structures back in 2008 and 2000 for those who are still looking at this as a bear market rally. And we'll also talk about the potential of that setting up, what would drive that trade, and ultimately what to do in the meantime. So stay tuned and we'll talk more then.
Morning, everyone. Welcome to PreMarket Prep. I hope you're having an amazing morning. Hope you guys had an incredible weekend. And a good morning, Peter. How are you doing today?
I am great, Carlos. Did you have a good weekend?
I had an amazing weekend, man. It was really, really good. So yeah, I sure did. Hope you did as well.
Excellent. Yeah, I did actually. Well, pretty good weekend. Although I did manage to jam up my fingers a little bit, so I'll be typing a little slow this morning. But we'll recover. So,
All right.
um,
Hopefully you're good there. Um,
yeah.
all right, guys.
Notice I'm in for Norm for everybody out there. I can tell I'm
Yes.
not Norm. He's our good buddy Decker's got, I think, his first day of school today. So,
Already, man.
so
Wow. It is.
we
It's flying.
It's always a
Flying,
busy
flying.
time, right? When everybody's got to get coordinated on the drop off and figure it out. And I don't want to go, or I'm really excited to go, or you never know with the
Yeah,
kids.
yeah.
But either way,
And all the new
it's
parents that don't know the flow of things, it's yeah. I'm telling you, it's a challenging, fun times. Have a lot of patience out there, Norm, if you're listening. That guy doing a
yeah.
U-turn there does not know what he's doing yet. Okay, let's get to it, guys. So here this morning, our gappers list, it's pretty decent as far as numbers. Not too large. We can get through a lot of these here. On the gap up, we see a couple of names that were very active last week. BBBY, V. If you guys remember V, low flow that went insane, up 18% today again. So this can be in play this morning. Let me go ahead and link my trade ideas as we're doing this, and we can go ahead and do that right over here. So yeah, so it should be a lot of fun. On the gap up side, we see plug and some other names there as well. Towards the downside, I have a couple of names here we haven't seen, so I'm not sure how they would trade, but they don't look too exciting. There are a few names we know, but outside that, it's a lot more questionable tickers, I would want to say. Especially if you have tablespoon here, TBLT. So we'll see what goes on there. All right, guys. So let's get to it. Let's go ahead and remove our watch list from here. But before we do that, Peter, let's get into our market pulse. Big shout out to Jared, guys. Thumbs up for every morning taking us to the market open there, engineering the markets, excuse me, and kind of giving us his macro idea for the weekend to get things started. But overall, Peter, what do we have for this week? And do not mind the U.S. Economic calendar there. That is updated by Norm, so don't look at that.
Yeah, so let's start right there. So there's only two things that we're watching this morning. Right about now, we should be seeing the Empire State Manufacturing Index. Doesn't normally have a big impact on the market, but it's always good to see how the manufacturing cycle is working. The forecast is down significantly this time compared to last time, so we'll see if it meets that forecast. And then around 10, we've got the Home Builders Index. Again, not usually a big market mover, but it's a piece of the puzzle. Globally, we've seen overnight and, of course, into the morning as pretty much North America markets are the last markets to open. We get the advantage of seeing what everyone else is doing. And across the world, we're seeing oil prices down a little bit. There's a couple of deals out there, an Iranian oil deal, and then China actually reduced their interest rates, which has some positive expectations on the market. So we'll see how those two things, both the oil prices and the Chinese impact, affects the market this morning. I'm not seeing a lot of the Chinese offerings yet moving on the North American market, so maybe that won't have a big impact. What I find interesting this morning is we've got some new meme stocks playing out. So while the SPY is still seeing fairly low volumes in the pre-market, and I expect that to continue. Over the weekend, Twitter seemed to, maybe it's just my feed, but seemed to be just full of all these memes of people saying, is every venture capitalist and investment broker on vacation? Because it was about people
Yeah.
saying, don't call me now. I'll reach out to you in September, October when I'm back from my place in Spain or wherever heck they might be. So yeah, I think we're going to continue to see summer type markets, which means we could get some quick moves, but expect a volume to taper off in the afternoons. But we got some good stuff on the gappers, so let's take a look and see what we got.
Yep, let's jump right in there, guys, and start here with our gap up list. Everything low flow up here. Is this right? Yeah, it is. So everything low flow except BBBY. And you got some big numbers here, up 29, 24, 17, and 17 again here. So let's take a look. We'll start here with VRDN. Low flow up 30% this morning, 460,000 share, a little bit light for it being a 22.5 million shares flow. And the pre-market action not looking great right now because you have the initial pop you started here very early on this morning, went flat for a bit, and you're kind of selling down with volume. So I don't like that setup for a low flow. If that gets better, throw it back out to us, but we won't be looking at that. We want to see on the low flow, heavy volume, a little bit of an ABCD pattern, bull flags happening right after each other. Here, this one, you do have the initial pop. You are coming back here, so it's getting a little interesting on TXMD, up 25%. Again, volume for a 7.5, still a little bit light, but it does have potential if it can get up here above 12, above 1250. It can be a good candidate for a low flow, possibly a scalp. Yeah.
Now, both of these, VRDN is a biotech, TXMD is a drug manufacturer. Both had earnings, but they don't have a lot of analysts that follow them because they are low float. So, that's why we're seeing the pop. But it's sort of hard to predict where these will go. If you look at the daily, like Carlos is sort of pointing out, like the daily doesn't look that exciting on either one of these, really. I'm not going to follow them unless something different happens between now and the opening bell. And then the next two, just to get to those, look, I can't find any news. If any of you out there have news on these, I'd like to see it. I mean, BBBY is just still, it's all about the news of their impending doom, right? How the stores are empty and everything's on sale. And I don't know, that seems like normal, pre back to school stuff in terms of the sales. But that news continues. And yet they're gapping up. So both of these seem to be new meme stocks that really are just getting the attention. They get a bunch of volume and they're jumping around. Nothing to do with the underlying fundamentals of the company. All about sort of the retail meme aspect of the trading, and that's what's pushing both of those. So, which means that with those being the only four things on our up gappers, there's not a lot moving up of interest so far.
Yeah, there's really not. V's the other one you mentioned here. This one, again, had a good day on Friday. We did have it on our list. A couple of you guys were looking at this one. Today's a hit or miss, guys. Up 15%. It can go anywhere from here. I don't like it as much the second day around. It does have some volume, but the pre-market has not been clean by any means whatsoever. So I'll keep it off my list for now. TRQ this morning, they are down 17%. Man, this is just a horrible intraday trading ticker here. Very light on volume too, guys. 798,000 is usually what they do on a daily. So maybe today they can surprise us with some good intraday action, but I'm not a fan.
This has an interesting story behind it, at least. So they are a Canadian copper miner. They had a buyout offer from Rio Tinto, one of the three largest miners in the world. But they had an offer for, I think it was $2.7 billion for a buyout, and rejected it, which is why you're seeing the drop now. So people are excited on the aspects of a buyout. Rio Tinto comes with deep pockets, and that certainly would support the stock. But to reject that offer, it tells us a couple of things. One, the company actually thinks they can either get a better offer and or are positioned well enough to go it alone. But on the other side, it means that they're now facing huge costs to dig out their mine. I think their primary mine prospect is an underground copper mine, which are very expensive to get to production. So they've got to find a lot of capital to get there, which is probably why we're seeing the big drop this morning. If this gets some institutional interest, then, we could see it move. But I don't like what it's doing pre-market so far. Like you mentioned, Carlos, down almost 18%. But that volume was all real early, right? And now it's sort of dried up. Unless it picks up again, once again, probably not on my list.
I agree with you there. So I'm going to keep that one off as well, guys. Let's head over to TBLT. No good. This is just dropping off of the face of the earth here. Probably heading back to $2. Let's take a look at LI. So LI this morning, we got some movement here. We're down 5%. Looks like, let me go back to that. We've been recovering slightly here. Any news on LI this morning? I also see XPEF was down here too, I believe. XPEF is here too. I don't see NEO.
The LI, they're late on the earnings game, but they had earnings and missed their numbers slightly. on the top line. They didn't really have an earnings for a target for earnings per share. So on the profit line, they lost, I think, 10 cents a share. But the bigger concern is production concerns going forward. So yeah, this is basically earnings, why it's jumping or moving, and nothing else is. LI, it's funny because occasionally I'll put it on my list. I know some people like to trade it. I have never found it to trade all that well, with a brief exception of that period about, I don't know, a year ago when it was trading really well. Every time I
When
look
all
at
the
it,
EVs
then
are
look at
trading
Neo.
well.
Right. And they were all moving well. But nowadays I look at LI, then I look at Neo. I'm like, Neo just seems to be moving better. So I might as well just watch that. But maybe today's its day.
Yeah, today's pre-market looks interesting, right? You got a nice drop here. You're coming back all the way from what is this, 30.19 to 30.1 almost. So might be worth taking a look at, but I agree with you. It has not been trading well. I don't think I haven't looked at least since, like you mentioned, about a year ago when everything was on fire. Today we do have Neo on here, speaking of, which does have a decent pre-market activity, not as much volume as we would like to see. And again, just look at Neo's daily, guys. This thing has changed. And if you guys remember when this changed, as far as its trading, it got to the choppier side, was when that piece came out of them possibly adjusting their financials a little bit there. So that was once that came out, I haven't touched it, and it hasn't been trading very clean, very, very choppy. So not saying that it's not tradable. It's just happens to, match up with the time frame of when that article came out. So interesting here, guys. We do have a little bit of volume. Might be worth taking a look at today. We'll put it on here, Neo. And then just for since we're looking at DCVs, let's look at XBEV. XBEV this morning is down 4.1. Also taking a bit of a hit here. Not as much volume, so these two look way better, Lee and Neo. Heading back to our list, GSK, it comes up in our list here and there. I do not like the way this one trades. Its price action is very funky. But I got to tell you this, though. This pre-market action now, it's down 4.8, almost 500,000 shares traded. We lost a lot of ground over the last week here, and we're gapping down again. What is going on with this, Peter? Do we have any news on why this thing is just slamming its face on the concrete here?
Well, we've got. I don't see anything really specific to them. I mean, they're an international drug manufacturer, one of the large ones. There's been some weird news, some COVID news. Novavax, which they're seeking some approval for their COVID booster shot treatment. The CEO of Pfizer was acknowledged testing positive for COVID. So there's like little weird news like that, sort of in those that are COVID drug manufacturer space. But I don't see anything for GSK. It being I think it's dual traded, which is probably why you see sort of that funky daily, like lots of gaps every day, but really small candles. I don't typically keep an eye on it.
Gotcha, man. All right, let's take a look here at the next one, SBLK. SBLK. No, I'm not a fan of this one. I think we have seen this before in our gappers list. I'm not a big fan of the way this moves. So low volume to on the daily. Today they have 100,000. Even pre-market, it's just not enough for us to take a look at this. Let's look at BP. Gapping down pretty big this morning, 4%. Again, foreign stock doesn't trade all that well. Intraday action at least. Big gap down today. This could be something. The thing with BP, though, you have to wait for the market open. You're not going to see anything great in the pre-market, even if they have a great day today. They say they go from 30 down to 28. You're not going to see that reflect here in the pre-market activity. It's just one of these nicey tickers that even with volume, they just don't trade that well pre-market. But I do like the drop today, down 4.4 there. Let's come back to that one. MRO this morning. This is no, it's no volume here. It's pretty dead for the most part. XPET we looked at. Lee we looked at. DVN is gapping down 4.2. This is an energy play here as well. We'll look at plug too. Someone mentioned plug, and I thought I saw plug in our gap up list this morning, and then it went away there. So we'll look at it. DVN, no, I don't like this one. Oxy, a lot of energy stuff down this morning. Looks like Oxy here. Oxy might be good today. Oxy might be good today. I like to drop down 3.9 this morning. We'll add Oxy next to BBPY up here on our main list. Okay, excellent. We'll stop here. Actually, let's look at one more thing because I got 3 tickers here that I kind of like to keep an eye on. We got Mara, Riot, and well, not much Riot, but Mara and Baba at least. They're both down here. Let's start with Mara. Mara this morning down of 2.4, but the volume pre-market is not quite there yet. They had a beautiful run over the last couple of weeks, right? Since July, early July, they've just been taking off here and been on a hell of a run there. Then we have Baba, which is not doing a whole lot, gapping down slightly. Beautiful trading day on Friday, guys. Did this so well. Beautiful gap down and recover nicely. It might be a good possible today. Not doing a whole lot right now, but let's see if that does come up to something. Peter, what do you like this morning so far?
Well, there's not a lot that I love. I mean, I'm gonna watch what I always watch. AMD is on my list because it always has something going on. whether it's just chop in the morning and then I've got to wait for the early afternoon. It's there. I think Tesla. It's sitting right around the 900 mark, and whenever Tesla sits around 900. It tends to get some movement. I have no idea, frankly, if it's going to go up or down, but it's likely to move a little bit. So that's another one that I might keep an eye on. And last, my good old faithful Apple. I'll go back to that as well because no specific news, nothing going on. But I like how on Friday Apple pushed up over 170 for the first time in a couple of months. And held that through the close. So I think it might be worth keeping an eye on Apple and see if it does anything interesting.
I do agree. We don't have a lot going on here, guys. It looks good. Yeah, this gap down list is huge, but if you go through, it's just not a lot that's on here that looks interesting. So Apple will be one on deck. AMD will be one to watch as well. I'm with you there. It's always a fun one to keep an eye on. It just seems to trade very well, even with the markets not doing anything specifically, right? So that's a good one. And then you also have NVIDIA, the other usual suspects that we keep on deck. So far, BBBY, Oxy, Apple, AMD. We have Tesla here as a possible for now, but I do agree, as you mentioned, that 900 mark can make some pretty good moves there. And all right, cool. Let's take it to our room, guys. See what we have going on. We're messing around here with a TBLT in chat. Let's look at AMC here from one of our buddies. AMC there. I mean, it's pretty flat right now. It's got great volume. I mean, 1.2 million. It's got to be a couple of block trades, I would assume, because that's quite a bit of volume. We're not seeing that entire volume be reflected here in the pre-market, but you can see there it is trading real nice as far as since 8 a.m. there at least. Coming up flat this morning could be interesting. This can be one that can turn very explosive. I'll put it as a possible for now and see where we go from there. Heading down over to Dream Chaser, you're looking at this is Unity. Yeah, Unity Software, and they are down 5% this morning. I mean, their run has been insane. Did we have them sometime last week on our list? I believe we did. I haven't traded this yet. Have you traded this, Peter, or looked at it closely at least? How's the price action?
I was watching it because I think it was early last week. It was a buyout, if you remember. And that's why it was on the list. I think it was Tuesday, and it did not trade well. And as you can see, yeah, that's right. So it was the 9th when the buyout was announced. You can see that's sort of when it moved up into this price range, and notice it's been sort of bouncing between a couple of dollars ever since. So I don't think it's they rejected. Babel 722 is saying that they rejected the buyout offer from APP. So that actually makes it more interesting.
That makes sense why they moved so much after. Yeah, that makes sense.
So
all right.
So that might get it some attention. I don't know. Like you have to keep in mind, it's it's sort of average volume isn't all that high, probably about 7-8 million, excepting some of these big days here. So I don't know. Maybe look, with such a meager list, you know what, it might be worth putting
throw it on there
on the back burner and see what happens, right?
Yeah. I mean, I do like the setup here on the daily. We'll have to see how this turns out. We'll put it here next to Baba. We'll come back to that. All right, we'll look at Plug. Yes, I wanted to look at Plug because a couple of you guys did mention that, and I thought I saw. Yeah, it definitely was on our gap up list because it was probably up 2% around here. And then it's just dropped from there. So I think Plug will be interesting. Their daily has been incredible. I mean, who would have thought, guys? This is thing from 19, 18, gapped up with the news. From there, more news confirmation, and it has not really looked back. I mean, this thing is just on fire. So I think it's worth watching here as well today again. And with the list that we have, as you mentioned, Peter, it might be worth putting on our main list as well. Heading down, SPY, some volume on the SPY. What is our buddy doing here? Yeah, we got a little drop at the moment there. We'll see where that goes.
That's that drop on the SPY, by the way, and thank you, Hamish, for digging it out there. The the Empire State Manufacturing Index that I'd mentioned has come out, and it came out negative. So definitely, below the forecast, and it's a big negative. So that is what's causing the sort of immediate drag in the market. Again, long term, will that sort of pull the market down throughout the day? I guess we'll find out, but
Yeah.
not a good sign there. Everybody was hoping to see signs of support, I guess, and strengthening in the market. That's not a positive one.
Let's head over to ENPH. You know what? I know this ticker very well, and not because of trading it. I know it because I don't like it. And this is again, very light on volume, guys. Extremely light, night face
Yeah.
here. So I don't keep an eye on it. I know are some people that have traded it. I believe other monitors have even swung this a good swing stock if you're keeping up with the energy and things like that. But I don't like it at all, Peter. I'm not sure about you.
No, and I mean, just switch that quickly to a 1 minute chart. You can see sort of why, I would avoid it. To me, like all that volume came in like one or two candles, and then look, basically it's
Yeah.
null candle, nothing, right? And then volume that caused it to move almost the full value of the drop here, right, from where it was at the
Mhm.
close on Friday. So yeah, ENPH is not. I mean, if it jumps up on our scanners later today, then maybe, but right now, I don't think it's worth watching.
Let me show you the 1 minute from Friday's open as well. I mean, this is Friday's open here, guys. You see how bad this is?
Yeah.
This is brutal. I mean, this is gapping up and down here. That means there's no volume. It just stops. There's no volume, and we're waiting for somebody to drop an order of 3,000 shares or whatever that is. It's just, and it trades like that way more often than not. I mean, more times it's doing this. Maybe on this day here where you had 11 million shares and you had a gap up and you ran, maybe this day was fun. The rest, probably not. So, reason why we won't keep that one on deck. And if you see anything that looks like this one, that is the reason why we kind of don't watch those. But ENPH trades like that all the time. That's when you do the ticker out there and knew right away that that's not going to be good because just the nature of that stock. Dick's Sporting Goods, another one that I only look at when there's earnings or news. And today they're not doing a whole lot of nothing, only 103 shares. Somebody made a mistake there. They meant to trade something else, maybe Tesla. Yeah, just look at this chart on Friday. It's just brutal. Brutal. Somehow it's managing to rip higher from July to now. It's been on a tear. It's been 78.5 to 107 here, the $30 plus move. Incredible, but not for intraday trading. Let's head down VRDN, excuse me, VRDN. We're starting to get some activity up 41%. Viridian Therapeutics, man, these companies, you got to be very, very careful. Anything with therapeutics on it, with pharmaceutical, biotech, these companies, man, you got to be very careful. What's the float on this, by the way? VRDN. Those are the riskiest stocks to usually trade. This one has a flow of 22.5, so a very low, not low, but low flow status there. Getting a nice pop this morning and got better, right? It did drop. Oh, this is the same one we looked at here. So it did drop. It did get better. I still don't know if I want to add this to my list. Let's come
Yeah,
back to it.
they're a relatively low float. I see the float here at just over 18 million. They did have some news where they had some positive clinical trial data,
Mhm.
so that's what's causing the jump. If that's the type of stock you like to trade on that type of news, then this might be a good one for you. But know that they're you got to know what you're doing. You can get hurt
Gotta know what
quickly
you're
on
doing.
these ones
Yeah, yeah.
because it might go up. It might go from $20 to $30, but it might do it by going through 16 first, right? So, and if you get caught in that, then that could hurt. So,
Yeah, I agree. Ralph Silla in chat saying that Brian Pessum is watching this one. Yeah, Brian does like these tickers. If you notice his watch this on Friday, he threw a couple out there that we were like, be very careful. But again, Brian's been trading for a very, very long time, very experienced. So, it's a whole different ballgame where he decides to look at something and you decide to look at something like this that's very risky and requires a little more experience in trading. So, all right, guys, I think we have an okay list. It's not great. We definitely have better type of list, but this is not bad for a Monday. Just kind of gets things started. And just remember, we can't say it enough, as Peter was mentioning earlier, people are out and about these next couple of days. So that summer trading is actually between now and what, end of September, maybe early October. it's pretty bad. A couple of things. People are going back to school. People are doing their final vacations. Some people are finalizing their move. They move over the summer. So a lot of people are out of their screen. You see a lot of chop and a decrease in volume. So be very, very careful on some of these tickers that might not run the way they usually do. With that said, let's head over to our community events and announcements. You can do this, guys, by heading over to our website and seeing what's going on. Just click on here on webinars, and this will take you to what's happening for the next 2 weeks throughout the week here.
Yeah, let me just finish before we get to that by just reinforcing what Carlos just said, because Carlos, you and Norm were talking about this on Friday as well, that the summer season doesn't end when August ends, right? It's really sort of mid-September, closer to October, and it depends. It's different every year exactly when, but when we start seeing the volume come back, and then that fall winter type volume come back in and price action. So just be aware of that. I've often taken vacation the first couple weeks of September, and be honest, never regretted it, because everybody's back in school with the kids. The markets are still down. It's a perfect time. So if you're thinking of it, that might be the time for vacation for you as well.
And the
But,
flights are so cheap. September, when everybody's back to school, they drop a ton, man.
They
So
do,
it's definitely worth it.
the crowds are gone off of all the tourist places. It's great. I find it is a great time. You still get some of the warmth of the summer, and I've been to Europe for a couple of years, in sort of September, mid-September, and it's been fantastic. So anyways, all right, let's get to the community events, because like every week we have a lot of stuff going on this week, and we have a set schedule. So it's Monday, which means we want to welcome all of our new members who decided to join over the course of last week and maybe over the weekend. We introduce you to the Bear Bulls community and trading if you're new to it, with our onboarding class that is with Carlos in the classroom at 8 o'clock every Monday. So hopefully you'll join us there if you're new to the room. If you're new, by the way, say hi in the chat room. We'd love to hear from you. And that leads us to then our Tuesday events, which are all about strategy and improving your trade book. I have the opportunity to present this week. We'll be talking about my lightning bolt pattern. So I'll break it down. I'll explain how it works and how you can take advantage of it, how you can identify it and trade it. So all of that will be happening this Tuesday. So that's tomorrow night, 8 o'clock. I'll be doing that webinar. And then next week, Andrew himself will be with us doing the art of trade management. And as hopefully all of you know, Andrew is the granddaddy of the room. He's the one that started it all and runs it to this day. So hearing him and his perspective is always a fantastic thing. So that will be next Tuesday, the 23rd of August at 8 o'clock, once again in the webinar room for our elite members. Wednesdays are all about psychology. And this Wednesday, we have the opportunity to listen to Randy Howell, who will be with us at 8 o'clock, talking about unlocking the hidden potential of your trading mind. We focus a lot on, how you can manage your mind and manage your potential, your emotions through trading. Because if you're new to trading, we tend to always focus on the technology and the technical aspects. For those that have been in trading for a little while, once you've sort of mastered that, the game becomes 80% mental, and you really need to focus on that. It's not you versus the markets. It's really you versus yourself. Randy is going to help us understand better how to manage that, and that'll be at 8 o'clock once again in the webinar room on August the 17th. Next week, Mike is going to be with us, back to starting his series on the trading psychology and running through his series of lectures, starting with the 101, creating a psychological journal, and how do you use that to then help build upon and improve your trading. So that'll be August the 24th. Sorry, Carlos, I sort of made you go back there. On Thursdays, Thursdays are all about mentorship. And on the Thursday mentorship classes, this is where you have an opportunity to hear from our moderators and hear how their trading is going. So starting with 11 o'clock, John leads our mentorship in room and in a sort of session class, which is always very valuable. He did a great one last week if you're able to attend, and he will be doing one again this week. That happens once again in the webinar room, and it happens during our trading hours. Ed is then with us and you know what? Ed will answer questions anytime, but specifically On Thursdays, he'll focus on helping you with any of your mentorship questions and addressing those, as well as the time, by the way, that Ed spends back in our main room, because we do have 2 chat rooms that go on simultaneously, as long as people are not on vacation, of course. We've got to allow everybody their time off and their vacation. But Ed is usually in our room a couple of times a week to share his thoughts. And then Thursday nights are Thor and his mentorship, which is always well attended. It's a great session. Thor, as I keep saying, is is the most consistent trader in the room. He knows his strategy. He knows what he's doing. He doesn't deviate. And that's simple. I mean, it sounds simple. It's very difficult, though, to implement consistently. But his ability to stick to his strategy and repeating day after day after day and have green, I think he's had green days for about 16 million days in a row. So anyways, listening to him is always worthwhile because his approach and use of the volume signals is fantastic. So hopefully you'll join us Thursday nights for that with Thor. 16 million. Yeah. It's a rough estimate. I may be off by a little bit, but it's something close to that. If you haven't tried it, try our stock trading simulator. It's a great free tool and you can get access to it anytime. There is a sign up, but that's only so we can save your settings. And then, you don't have to sort of enter all of your chart configuration information every time. If you want, you can also sign up for our watch list where we'll send you sort of suggestions. Watch this stock, trade this pattern. It'll give you some ideas of what to look at, things that you can test in the simulator. But you can test any stock any day in that simulator. So it's a great tool, completely free. Go try it out, stocktradingsimulator.com. Like that, then you might want to try our trading. It's another free tool. TradingTerminal.com is a great place to go for all your news and information, earnings. I keep it up all day, every day, so I can quickly see what's happening in the markets and keeps me on top of things. If you love those and you want to see what the paid tools are like, well, then consider joining us on a trial membership. You can use the code PreMarket24 to get a 1-week discounted trial rate. Normally it's $39. We'll give it to you for $24. We typically have this discount just for those that pay attention right here at the Pre-Market Show. And we have confidence that when you join, you'll see the value of the community, because there's a lot more than the webinars, which are all recorded and saved, by the way, for our elite members. You can get access to all of our catalog, hundreds deep catalog of fantastic webinars and information with thousands of hours of material in there. But it's also about the chat room, which happens every day. Like I mentioned, 2 chat rooms that often happen simultaneously every day, where you can sort of see what's happening real time. People give you their thoughts and their information. A couple of jokes, some humor. It's good to have a community surrounding you when you're trading, because otherwise this can be a very lonely endeavor. And if you love that and you want to join more permanently, then look at joining us with an annual membership. If you're going to do that, take advantage of the free one-on-one coaching that Dr. Kenneth Reed is providing. Use the code READ50 to get the 50% discount off our elite annual membership and the free one-on-one coaching. So it's a fantastic session. I know a bunch of people that have taken advantage of it and have found that it's very useful. So with that, we got a few levels to set, and then we're going to start. We're going to get ourselves set for this trading morning.
Yes, absolutely, guys. Let's jump in. Thank you, Peter, for that. All right, so a couple of things. I was looking at do you, because someone in our YouTube chat mentioned that, and I thought they were just telling someone, do you, but it's actually a ticker. That doesn't look very good here. So yeah, more of a penny stock, so we won't be looking at this type of setup. Kind of similar to what we talked about VRDN, right, where you had this initial pop and just going sideways, so not really a fun one there. A couple of more being thrown out here. We'll look at Dan is giving us XBEV. Is it starting to do something here? Yeah, it started to come alive a little bit of a pop there. Again, I got Lee here as well. I got Neo. Why not? Let's throw XBEV in the mix too, and then we'll see which one of these we can keep a little bit later. And then Netflix. What's going on with Netflix? Let's see, Netflix. Something happening here. There is some news breaking out. I don't see a movement just yet on it, but I do see you guys are throwing it out. If you gotta throw something on the list, Netflix. Okay, all right, so just to throw something on there. Okay, we'll put it on here. I'll take your guys' words for it. So here it is, Netflix. All right, we'll throw
Somebody
it on there.
thinking that Netflix has got to go up because I spent all weekend watching it. That's careful. Careful
Yes.
with making that correlation.
Absolutely. And then a couple of questions here. Carlos, on Friday you say you don't make trade decisions based on profit or loss. I'm new and constantly look at how much I am up or down after a stock I buy or short. What should I be doing? That's a great question. K. C. Hill. Hopefully I said that correctly. But I think it's tough because trading is about the money, so it's really tough to not look at the P&L. But you got to change your mindset. If you're starting out and you're brand new, you got to remember that trading those first couple of months is not about making money because you're probably not going to make money. It's about fine tuning that process. I know it's very difficult because the reason we started trading is to make money, right? So now I'm telling you, it's not about money. Focus on the process. What's wrong with this guy? But it really is. Hide your P&L. Try going a week just hiding your P&L and just focus on the process, right? Make sure you're trading small, obviously, and see if that helps you. But if you're getting into a trade, you immediately look over to your left or your right to look at your P&L, then you are putting too much focus on making money and or not trying to lose money, which are horrible ways to trade to get started. So just try that. Just hide it. Make sure you are trading small. Make sure you have risk management in place and also hard stops because let's say if you're not looking at your P&L, right, which is important, and just to kind of fix this habit, if you make a mistake or you buy too much or too little, at least your maximum loss for the day or maximum loss per trade is going to protect you from making a mistake that you're not seeing what your P&L is, right? So just keep that in mind. But again, yeah, Peter, please add to that.
No, sorry. It's good.
Yeah.
I wanted to reinforce that. I think it's an awesome point, and exactly like Carlos says, you got to focus on the process. It's like any activity, right? I love sports analogies, but let's do something a little different quickly this morning, because I always have in the back of my mind this one where anybody watch Karate Kid? He wants to learn karate, and what does Mr. Miyagi do? He has him paint a fence. Paint the fence, wax the car, has him wax his car. He's like, what's that got to do with karate? And then of course he goes and throws a punch at him and wax on, wax off. Exactly. And then suddenly he can, suddenly he knows karate. Well, it's trading, I think, is sort of like that. If you just sort of conceptually think of that, if you focus on the technical levels, the process, what am I trying to do repeatably, then you'll find the money will follow. If you focus on making money, you're not going to sort of build the right skills necessary to do that consistently. So that's why we say the best approach is focus on creating a trade book or a strategy that you're going to follow, build the expertise on that, and then the money will follow. I still to this day hide my P&L. I often don't even look at it throughout the course of the day. Now, I've been doing this long enough, I generally know where I'm at on the day. That can be very difficult for people. But the point of it is I want to focus on, did I take a good trade? Win or lose, was it a good trade? Did I identify the right levels, right? Did the stock pull back before my stop out and then go in the direction? Things like that. Like if you focus on that process, it will yield the results. So anybody that's, and it's inevitable, right? We know that the money's the end game. It's sort of like the goal is the end game. But if you focus on only scoring goals, you're never going to get yourself in a good position to score a goal because you haven't focused on the footwork, the passing, the whatever else you need to do. Trading's a lot the same way. Focus on the process. We promise you it'll lead to better results in the long run.
Yep, absolutely. All right, guys, let's get to it. We got BBBY, Oxy, Apple, AMD, Plug, and Netflix all on deck here. Again, not a great list, but it's not horrible. Here's BBBY. Again, no reason why this thing is popping up 16.6, but we will keep it on deck and see how we can take advantage of it. No shares for sure with Interactive Brokers. That has seemed to be the theme with this one the last couple of times it started to get going. I don't know what's been happening before August, but after August, the few times we had it on deck, there has not been any shares for sure. And when there is, it's very little, 1,000 units, which 1,000 shares can go in a matter of a second. They might actually not even be there by the time you hit your hotkey, even though they're showing. So 1560 high of the pre-market should be a fun one. We have 14, another level here as well on our daily. You see a little bit of action there in the pre-market as well. Above 1560, if we do decide to get going with the next level I see here, is going to be 1711. So again, guys, be very careful with this one. It's kind of like a low flow. It's moving very aggressively, and obviously it's memeing. What's the stock? What's the float on this, by the way? BBBY.
The float's pretty good.
61, but it moves like a low flow. I mean, 61 million. Just be very careful. Not an aggressive low flow, but definitely still one you need to watch your risk and make your money on the move there. You do not need to take a whole bunch of shares. Here's Oxy. Oxy this morning, we're down almost 4%. Again, doesn't move a whole lot in pre-market, but I do like this drop here, especially because we're gapping down from an area of resistance. The last few times we've done that, we actually ran pretty good towards this 56 or at least to 61.25, right? So maybe we can get some kind of that type of action today. Towards the top, guys, plenty of stuff here. Highs and lows of the last 2 trading days. I don't think you really need to look at anything or add anything up there. For the most part, I think you're set. And as I mentioned before, the 61.38 looks like a decent area for a possible test if we're going to be staying within this range that we have tested over the last couple of weeks. This could be a drop to retest at 62 or at least 61.38 would be fun. If we're able to really break down again, I don't think this is going to happen today. We got 59.59 and obviously 56.96, but the 61.38, if we're going to be weak, looking very good right now on these levels on the daily. Let's take a look at Apple here. So Apple will remove our older list. And again, just a good one to watch. Not doing a whole lot. Actually pretty flat this morning. We are keeping a level higher of the pre-market 171, 171.71. And then we have towards the bottom, the low of the pre-market over at 170.73, 75. So again, not a whole lot going on right now. It has been really strong. We'll see if it can get, well, it's going to get the volume for sure. Let's just see if it's actually going to trade well and trend in any direction here. So we'll see how that goes. And I had a question on Apple. Someone asked, how we consider, or not Apple, just any stock overall, how do we consider it to be to extend it for a 1 minute? For example, BBBY. I mean, if you look at this ticker here, guys, you really can't set a number, right? It's kind of like more of a percentage, right? When it comes to extended. Now, I don't trade the 1 minute because things can get very extended very quickly. And you don't have a whole lot of history to go by, right? So when the market opens, you get the volume, that 1 minute starts, dropping down quickly. I cannot tell from just that one candle, 2 candles, if we're extended or not. I need more data. I need a 5 minute, I need a 15 minute, 10 minute. By then, I can see the VWAP. I can see, okay, what's the original move we had here for a possible breakout? Are we getting a pullback and are we extended or not? Because that extension is going to be based a lot on the information you have. So for example, if you have this candle here that drops like this, right? And then you get a pullback up to here and the VWAP is here, well, that's good. I have information, I'm going to take that short. If you have a candle that looks like this, right? A lot longer, but you still get a pullback up to here and the VWAP is here, it's the same thing, right? You're not extended. So you can't just tell of this one candle, right? If you're going from $2, $3, if it's extended or not until you have a lot of information, at least for me. This is why that 1 minute, it's not easy to trade. Andrew has put in a lot of material. How did he trace the 1 minute, what he looks for? Definitely take a look at that. So here's BBBY right now, guys. We do have a couple of levels there. Next one on the list is Apple. That one is set. AMD stuck between the highs and lows of the last 2 trading days. I think the only thing we need to add here, guys, is 99.76, and we are all set. Let's look at Plug. Plug's stuck between some levels as well. High of the pre-market on Plug is going to be 30.45. Beautiful run over the last couple of weeks. What's the next level towards the top? Oh, we have very, very clean level here. It's going to be 31.82 area. And I think that's all you need for now. If we can get up there, man, this thing is on fire. I think we might see some sideways action. I'll be shocked if Plug can continue to hit that 31.82 and higher today. We'll have to see, especially with the lack of volume that I think we're going to be getting today. Here is Netflix. Oh, so people are asking why we have Netflix on deck. Oh, because Chris MC says so. That's the only reason why we have it on here. No, guys, we just put it on here to see if anything's gone, but there's no volume to it. We put it on there just to come back to it. It really doesn't belong here. We'll put it back down to a secondary list really at the moment. We'll look at our secondary list and see if anything else is going, but at the moment, I do not see anything else that looks BP. Guys, if you like BP, if you trade this one looks very good today. The nice drop there. I don't like the way it normally trades, so I'm going to keep it off my list. U has a very, I'm going to move U up. I'm not a big fan of it, but today their pre-market activity continues to look really nice. So maybe today could be tradable. And also for Netflix, guys, keep in mind, Netflix is one of these stocks that doesn't get great volume. They're not in play today, but they don't get great volume. So you can actually, I have to wait for the market open to see how that thing is going to trade. So I agree with you guys. It doesn't have that much volume. We're just kind of messing with that. All right, guys, I think we're all set. One last thing here. We got a question over on YouTube. What strategy is good to trade on Apple? And, any strategy. I think Apple could trade every single strategy that's out there. I mean, when it moves well, it has the volume, it has the liquidity. The spread is always great when the market open. I don't think I have ever seen Apple like at a 30, 40, 50 cent spread, even at 171, even when it was higher. It's got a really tight spread all the time. AMD, same thing. They usually have a very, very good spread. The price action is nice. They trade very well. So you can really look for any strategy on these, right? You just got to be patient and wait for your setup. I think Apple, AMD, NVIDIA, any strategy like the Mountain Pass that Peter will be talking about tomorrow night. It's also a very good one for Apple and AMD to trade on. So make sure you log in for
Lightning bolt, actually.
Lightning bolt, excuse me. Lightning bolt. Yep.
Yeah.
When are you doing the Mountain Pass? Those are two really good strategies.
I don't know. We'll be doing that again soon, but not for a little while. We got a busy schedule until the end of the year.
Yes, we do. We're jam-packed, guys. So keep on the lookout for that schedule. All right, so we're all set. Let's wait for Brian to hop on in here. Oh, moderators list. Excuse me, moderators list. We got a couple of moderators here. Let's take a look at that. And as I am doing this, guys, let me disable this video. Hit that thumbs up over on YouTube. It does help quite a bit. Right now, I think we're seeing some summer-like volumes on our likes, sitting at 141. So even summer trading is affecting our summer likes here. So let's see if we could break this over. Here we go. All right, here we go, guys. We got Amen, potential long stages, Nike and Tesla. Susan looking at Oxy, Spy, and Tesla. Secondary list, Apple and AMD. No IPOs for today. We're still waiting. Oh, so these all did not actually open last week. So all just sitting on there. Jared, XOM, BBBY, Tesla. Secondary list, Apple and Lee. Megan looking at a JD, Tesla, and Roku. There's Brian's list. We'll look at that in a second. Dima, BBBY, Lee, AMD, and Apple. Peter, AMD, Apple, Oxy, TRQ, U, and NVAX today. And here's Brian's list. We'll be looking at BBBY, which again is just on fire this morning. Rivian, Baba, Oxy, and U. So that is it, guys, for this Monday morning as we're getting started. Thank you so much for joining us over on YouTube. We appreciate it very much. If you haven't had the opportunity, now's a great time to hit that thumbs up and get us to our 250 threshold or 300. That'll be very, very much appreciated. Peter, thank you so much for covering this morning. Will we see you tomorrow, or you are going to go back and do what you do?
Well, thanks a lot for having me. I appreciate it. Yeah, I think Norm will be back tomorrow, so we'll welcome him back then. And have a safe trading day, guys. Make sure that, as always, only trade when you see your setup. Don't force anything. If it turns out to be slower than you had hoped, right, just wait. The opportunities will come, and if it's not today, it'll be tomorrow. But just be patient and trade your setups. Take care and have a good day.
Look at this here. We cannot leave without check this out. Check this out.
There you go.
So there is Decker, the little man, Norm's little man there, kindergarten. Wow.
How it's amazing. I remember when he couldn't even walk.
Yeah. This just means we're getting older, Peter. That's all it means.
Yes. Well, hey, look, it's the circle of life. It's the way it goes. So I wouldn't have it any other way, but that's awesome to see.
Yeah, so hopefully he has a great day. And guys, hope you got a great day as well. And we'll see you all tomorrow at 8:30.